Hey, what's up, my friend? So in today's episode, right, I want to talk about trading psychology, right? How to master your mind and money. So here's the thing, right? When it comes to trading psychology, right, one of the biggest issues traders face is that they have this need to make money syndrome, especially those who attempts to trade full time. So what is this need to make money syndrome? Is where you have a trading strategy, a trading plan, but you have difficulty following the plan because you need to put food on the table, right? Like for example, let's say you are trading for the month of February, right? You are in a drawdown and you realize that, man, if I don't make money this month, how am I going to put food on the table? How am I going to give allowance to my kids? How am I going to pay my mortgage? How am I going to pay my bills? So what do? Well, if you're in a loss, right, you might shift your stop loss further so you don't have to take a loss. You might double down on your trade, right? Trade even larger, hoping to make back your loss, right? Over the next, one or two trades. And you can see that this type of action will lead to disaster. Well, you may get away with it once or twice, but it's only a matter of time before you lose a huge chunk of capital, and that's it. That's the end of your trading career. So now the question is, how do you overcome this? How do you master your mind and money? So let me share with you 4 tips, right? Number one, what you want to do is to have multiple source of income. There are many ways to do this. You can, for example, maybe have a part-time job, right? Tutoring people, kids, or whatsoever. So you get another additional source of income, right, on top of your trading income. So even if you don't make money from trading, you can at least, still put food on the table. Another way you can do is affiliate, right? What affiliate is basically you get paid for recommending services or products to others. For example, I use TradingView, right? Whenever I, let's say, refer TradingView to a friend and they sign up for a pro account, I get a small commission fee. Or maybe introducing broker, right? For example, if you are happy with a broker that you're using and they have a introducing broker, a so-called program, what you can do is that you can refer a friend to the broker and again you get a cut of the fee. So there are many ways to go about it, and the first thing that you want to do is to, again, don't make trading your only source of income. Have multiple income streams, okay? Second thing, you want to have a pool of money set aside, right, to cover your living expenses, ideally 12 months or more. This way, maybe you have a drawdown for 2 or 3 months. It's not going to affect your livelihood because you already have money set aside, right, to cover your living expenses, whether it's paying for the mortgage, the bills, allowance for your kids, etc. So that greatly helps as well. Number 3, know your deepest drawdown. So this will be very easy to find out if you're a systematic trader, right? The report will show you what is your deepest drawdown, and if you know what is your deepest drawdown, let's say based on historical backtesting or maybe your own trading, you realize that your deepest drawdown has been 30%. So whatever drawdown that you're in right now, maybe it's about 20% or 22%, you know that historically, some point in time, right, you actually encountered a worse drawdown and still survived from it. So that, at the back of your mind, right, should still give you the confidence to keep trading because this is not the worst that you've experienced before. Okay, so number 3 is knowing your deepest drawdown. And finally, number 4 is to increase, right, your net worth relative to your account. So what I mean by this is that, let's say your net worth is $1 million, right? Your assets and everything, $1 million, right? You don't want to be trading a trading account, right, almost $1 million because your entire net worth is on the line. And if you do that, your trading psychology is going to be very, very difficult to handle because 1% of that is basically 1% of your net worth on every single trade, and it's very difficult to swallow. So what you want to do is to increase your net worth relative to your account size. So let's say your ideal account size that you want to be trading is $200,000. Then great, right? Don't have a net worth of $200,000. Increase it to $1 million. So at least your trading account is only 1/5 of your net worth. If you want to be trading $1 million account, then ideally have a net worth of like maybe $4 or $5 million. So your account, right, is not a huge portion of your net worth, and that again, right, helps you execute your trades, right, more consistently, right, to have your net worth, right, to be a much larger percentage compared to your trading account size. Okay, so I think if you have read the trading codes by Ed Sakota, he recommend having not more than 10% of your trading account, right, as part of your net worth. So to me, 10% is a little bit low. I'm still young. I don't have much obligation, so I'm willing to actually push that figure up to 40 or 50% for me personally. So you have to find out what percentage suits you given your own circumstance. But the general guideline is that the greater your net worth relative to your account, right, the easier it is, right, for you to execute your trading, right, consistently. All right. So with that said, I have come to the end of today's episode. If you have enjoyed it, right, don't forget to subscribe, and I will talk to you soon.